Inflation's at 40-year highs. The Fed is going to start raising rates. Now, the last time the Fed said they were going to start raising rates, the market fell 20%. And it only started going up when Powell, the Fed chairman, said, okay, I won't raise rates. So now he's saying he's going to raise rates again. We have to understand what's going on. We have to know where to be, where to hide, what to avoid. I'm going to get to all of that in this week's video. Stick around. Hey everyone, this is RC Peck, and this is my weekly update where I look at current news, current events, and we talk about what is going on from the viewpoint of prices, price charts, direction of price. And this is a pretty interesting week because the Fed has come out, not recently as in today, but let's see, they came out on January 5th, the notes came out on the 5th, and they had a meeting on the 14th and 15th of December. So pretty recently, saying they're going to raise rates 3 times. We have to look to the price charts because they've done this playbook before and the market absolutely threw up and fell 20%. Now, even if you're not in the stock market or you're a buy and hold or you have all your money in annuities, you're gonna learn a lot from this video because it's teaching you and showing you a better way to invest. So I'm gonna jump over to the price charts and we're gonna get this going. Okay, so what we have here is a 4.5-year price chart of the S&P 500. I want to first point out the last time the Fed said they were going to raise rates. So on the screen, I'm highlighting the last 2 or 3 months of 2018 here, if you can see that right there, right? And the market did not like that. It fell about 20% there. The market really only stopped falling when Jerome Powell came out and said, okay, I'll stop raising rates, and then the market took off. So this is our first reference here of the last time the Fed is using the same language. And then once Jerome reversed his stance, the market went up until COVID. This was a man-made, or if you live in the Seattle area, a person-made event right there, right? That was put on because the world basically said we're shutting off the economy. But here we are today with Jerome Powell saying he's going to raise rates 3 times. So we want to look at what's going on now. If you look at the screen, he started talking about this right there, saying we're going to raise rates 3 times. And then the minutes of that FOMC meeting came out. So first of all, if you notice here, the market is still going up. It has not collapsed. It is not collapsing. It is actually still going up. And so things do look different from the end of 2018 when the market started falling immediately, went sideways, and then fell again. So it looks like the market's digesting. I don't even want to say look. The market is digesting these 3 rate hikes so much better, which leads me to believe, by looking at the price charts, the market is taking in this information saying, yeah, we can do 3 rate hikes. We can do 3 rate hikes. So first of all, is the market worried about the 3 rate hikes? The answer is no, because I'm looking at the price charts. Now we can look at other price charts and look at, this is all world ex-US. Same thing here, just right about there-ish is where the Fed came out and said we're going to raise rates 3 times and slow down money printing. Not eliminate it, but slow down. So money is still being printed, which is also an expansion of the balance sheet of the Fed. So international actually likes it better. So that's one takeaway right now since those 2 announcements, the announcement and then the release of the minutes. International has been doing better than US domestic. The other thing is, let's just look at commodities here. So this is commodities. This is a tracking symbol for commodities, DBC. And again, same information here. We're just kind of showing you where the Fed came out and said rates are going up. We're going to do 3 quarter-point increases. And you can see what happened after that for commodities. Commodities after that announcement went up 7%. So commodities are loving this announcement about rate increases. They're moving higher. I think that's the biggest story this week. Well, for me, it's the biggest story because I want to know where money is flowing, what people are buying more of given what is going on. And that's a big part about what I teach in my training is say, you've got to look to the price charts with the news and have the news ask the price charts if there's a problem. And commodities is saying not only is there no problem, we're moving higher. Okay, so what do we have? We have stocks overall not really that concerned right now. We have international stocks doing better than domestic stocks. And we have commodities clearly saying high five, we're moving higher, and they are rocking higher. And that's what we're seeing. And this is what this is telling us is A, maybe where to invest or where to lean more into or have a larger allocation. But it's also telling us that things are okay. The world is not ending. The Fed is just raising rates 3 times, and each increase is a quarter point, and the market is really fine with it. I've had some people ask me about the Nasdaq 100 and saying, well, maybe it's over. Maybe its 12-year push is over. The first thing I'd say is the Nasdaq 100 was created in 1985. Okay, and over that time period, it has underperformed for short periods of time, 2, maybe 3 years at the most. But when it has underperformed, it's underperformed for 6, 9, 12 months, and then it starts outperforming again. So that's about 35 years, 37 years of the Nasdaq 100 outperforming. Doesn't mean it has to continue outperforming, but you don't necessarily want to count out the Nasdaq 100 right now. There is a battle going on between kind of the S&P 500 and the Nasdaq 100, kind of like which is the stronger index to be in. And this is a relative price chart here. So all I'm showing you is the S&P 500 being priced in Nasdaq 100 units. So if the black line is falling, which on this screen, this is what, 4.5 years, it's either falling or going sideways. So the S&P 500 and the Nasdaq 100 have basically been going back and forth with each other since July of 2020. So let's just, for easy math, call it for the last 18 months, they've been equally strong compared to each other. Sometimes one is stronger than the other, and sometimes it's not. But there's no like, oh, absolutely, you got to be in the S&P or if you got to be in the Nasdaq. I think the overlying is really the U.S. stock market, VTI divided by VEU. So VTI is all the stocks in the United States, and I'm dividing it by international stocks. I'm showing you a relative price chart here. So if the price line is going higher, that means U.S. domestic is outperforming international. Now, I know there's a correction right now, and I know there's a correction here, and this is interesting. So here's Jerome Powell coming out here saying we're increasing rates. So as of right now, and I said this already, I believe in point number 2, international right now is outperforming. But if I were to zoom back on this price chart, you can see there were many periods where over a short time period where international did outperform U.S. domestic. But then U.S. domestic got right back up on its feet and started outperforming. Now, I don't know if 2022 is the turning point for this. It's too early to tell. Okay, I wanted to show one more thing that I thought was just so fascinating. 2 stocks, same sector completely, and they're having 2 very, very different reactions to what is going on. So one of the largest stocks on the planet, based on market cap, is Taiwan Semiconductor. It's $730 billion in size. And it has just, I'm recording this on Friday, it has just broken out to new lifetime highs. Now, this was a beautiful, beautiful breakout. It broke out, it sat back down on the breakout, and now it's at new lifetime highs. So look, I was saying NVIDIA will be the next $1 trillion stock, and it may be the next $1 trillion stock, but now we have a couple competitors, one being Taiwan Semiconductor, which is in the exact same sector. Now, compare Taiwan Semiconductor, TSM, to NVIDIA, and notice the news was the same. The news was completely the same to NVIDIA as it was to TSM, Taiwan Semiconductor, but Taiwan Semiconductor has made new lifetime highs, and NVIDIA is correcting. Not crashing, not breaking, not going away, but correcting. To me, this is what I love about price charts. Like here you have TSM going higher. It's based in Asia. Another interesting thing, if China's going to invade and take over Taiwan, we probably are not seeing TSM at new lifetime highs. And then here in the US, we have NVIDIA, which is one of the largest stocks on the planet. It's falling. And we'll see, this could just be a correction. Right now, we'll say it is a correction, but just super interesting things going on right now. So let's do a takeaway and wrap up on this so you can kind of get your head around what is going on. I've been getting a lot of emails about what is going on, just a lot of concern. Rampant inflation, dollar crashing, market teetering. We have to understand how to read a price chart, right? It is very, very important. And that's why I do these weekly videos. It's partially for me, partially to think out loud, but also to include you and to show you a better way of growing your money, right? Because when you can see the price reacting or not reacting, then that gives you clarity. Of course, there's the strategy. How do you take this information? How do you put it into a proper, simple allocation? But we have rates going up. We have year-over-year inflation in the US, the highest in 40 years. We have some stocks in the exact same sector making new lifetime highs while others are correcting. And so this really is the time to be looking at price charts. But the big, big, big takeaway, if you had to take one thing away from this week's video, is stocks are fine. Some parts are doing better than others. Some are doing worse. But generally speaking, stocks are doing fine with the news that's going on. Bonds are not doing fine. The dollar is correcting down. What is doing best, and maybe this is the takeaway for the week, what is doing best is commodities. Thanks everyone for being in my world. I appreciate you watching this and these videos. Please leave a comment. Tell me what's going on with your mind. Be kind. Let me know where I got it right. Where did I get it wrong? What did I miss? What am I not looking at? What did I not think about? I read them all. I reply to them all. And if you like this video, you will like my other weekly updates and my Ask RCs. Thanks for being in my world, and I will see you on the next video. Okay, bye.